Welcome to Second Take, the show that focuses on the issues behind the news. JSE and NYSE listed Goldfields announced favourable results this week, but also lost 5 employees in a deteriorating fatality trend that is perturbing management. Mining Weekly editor Martin Creamer is in the studio to tell us more. Welcome, Martin.
Thanks, Shannon.
The company says it lost 5 employees during the first quarter. What seems to be the problem, and what is the company doing about this tragedy?
We first got to look at Goldfields, and on the very first day of office that the CEO, Nick Holland, took over, there was a tragedy on one of his mines, which led to many deaths. And from that point on, he's always said, if we cannot mine safely, we won't mine at all. And it's one of the companies that sacrificed a lot of high-value reserve in the interest of safety. They will not mine if it's going to be unsafe. So, there were a lot of high-grade pillars worth about 2 million ounces of gold that they've said we will not mine because it's unsafe. So it's particularly poignant for them that they had these 5 deaths in the quarter, the first quarter of the year, the March quarter. And this has sort of set a trend which is perturbing management, because they had the tragedy in 2008 when 40 people died in the year, and from then on they've been very firm on being a safe operation. And they took that down to 17 last year, and now all of a sudden they see this trend reversing. It's at the fatality level, not so much at the injury level. This is what's perturbing them, and so they want to make sure that they get back to that era of reducing these fatalities, not being on a flat line or not deteriorating, but getting down to business and taking another step change, because they've had some very good step changes. And we've seen them, close shaft for 17 months at a time while they upgrade them. So they mean business when it comes to safety. And I think that we will see an improvement now on this trend where 5 people died, in the quarter. That would really deepen their concern. And we see them making those sort of statements that they want to reverse this trend.
Now, Goldfield says it's assessing the potential exposure to the case of silicosis sufferers. Can you tell us more?
Silicosis is something that is haunting the gold mining industry at the moment, and it has arisen out of a situation where they felt that they were winning the battle against silicosis. They've taken tremendous strides. They had a target of 2013 where they would really eliminate this problem. We can see strong steps have been taken with filtration and keeping dust out of the air. But at the same time, the Constitutional Court of South Africa, which is the highest court in the land, has now opened the door to individual miners suffering from silicosis having lawsuits against mining companies. And it stems from, I think, a situation where the mines were a little bit parsimonious. They were using past legislation around TISIS and the legacy issues to pay compensation at a level which was below what was the norm for compensation in South Africa. So they were trying to get away with a lower level of compensation. The unions fought that for a while. And we now see the courts saying, that lower level of compensation is inadequate. And this has opened the door now to individuals actually having civil cases against gold mines. And of course, the courts have still got a rule on that. But the thing is, the first person in this lawsuit is claiming 2 million rand. And if you multiply that by the estimated 300,000 that are suffering from silicosis, you end up with that haunting 11 noughts position, which takes you, well into, even in dollar terms, it's something like $100 billion. So it's a scary number. So this has focused the mind of the industry, and they're working flat out, through the chamber to arrive at a position on silicosis. And that's why we couldn't really get a chapter and verse out of Nick Holland of Goldfields at the latest presentation, although they give a round table access to the CEO, which is fantastic. I mean, no other mining company does that, where you can sit around a table and put all questions to the CEO and his team, and they answer them in quite a lot of detail, which is fantastic. They couldn't actually do that in this instance because of the fact that the industry is working on this, and the industry wants to have a position and then individual companies will decide whether they will fall under that position, take up that same position or not. But I think that we're going to see a solution here because of the speed with which they're reacting, and perhaps they will get some union support. I know that the National Union of Mine Workers is also on a crusade for silicosis sufferers, but they said they would do it in a way that wasn't directly linked to the court cases at the moment. So I think we could have possibly a better settlement coming out here, which would be good for South Africa, because you don't like these $100 billion figures coming out from London, from analysts who are gold analysts, making these calculations, very sort of rudimentary calculations, which would wipe out the total gold mining industry. Yeah, because if you look at the market capitalization, I mean, of all the mines put together, they don't come to that figure of 100 billion. So it would be wipeout. And so they've got to do something to make sure that these sufferers are compensated, but at the same time is that the industry does not get unnecessarily badly hurt.
Now, you mentioned the discussion that you had with Nick Holland at a round table, and he brought up the issue of nationalisation. What are his thoughts on this?
Yeah, we haven't been asking him questions about nationalisation because he once addressed that at an open forum, one of his results presentations, I would imagine about 18 months ago, where he said he didn't think that nationalisation would happen. And so people haven't been putting that question to him again, but fortunately, a journalist from the SABC put that question to him. It was one of the last questions, and it ended up as being a fascinating reply, because nobody's actually dealt with the issue of human resources. And when you think of it, you know, we look at the Sunday papers, and there are massive ads for our miners every Sunday. I mean, I've noticed them in the iron ore space, you know, from Australia. Fortescue will put these glorious ads in, showing mothers and children on the beach. I must say the Pilbara is far from the beach, but they give this idea that you know, South Africans should come over to Australia and work there. Why are you busting your gut in the Northern Cape here when you know, you've got people trying to steal your assets? You know, we had the ICT situation with Imperial Crown Trading trying to steal 21.4 of this long-standing asset. So why do you muck about with things like that when we can give you and your wife and your kids a glorious time and colour pictures and big ads luring South Africans over? And this is having an impact, because you know, Nick Holland said yesterday that you know, the cost of human resource is rising. It's a concern because South Africa is seen as a happy hunting ground. You know, every time Julius Malema utters the word nationalisation, a few more recruitment agencies phone the South African miners and say, oh, do you want to work under the state here? You know, you're working under the private sector. Come and work for us. We can give you an enormous opportunity here. What about your kids' future and everything? Do you want nationalisation? It's going to destroy you. And of course, they lure them away. And he made this a point yesterday that, you know, already we're battling with threadbare skills. If there is an official announcement on nationalisation, these recruitment agencies around the world, which are private sector agencies, making a fortune out of commissions by recruiting our people at a time when the world is crying out for mining skills and paying top dollar for mining skills, they will pull the plug finally on our human resource, because these fellas and their wives and kids will be lured out of the country. We'll have no more skills here. We're already battling. But if you actually officially go along that line, you know, you're going to remove those remaining skills that we have and send the industry down the drain. Because even if Julius Malema thinks he can take over, he's going to have no one working for him with any, you know, experience. And so that's another take on mine nationalisation, which I think was an important statement to make, because the National Union of Mine Workers General Secretary Frans Beleni was saying, you know, it's not only the unions that should be attacking nationalisation. You know, traditionally around the world, the unions favour nationalisation. Our unions are enlightened, saying, over our dead bodies, you know, we haven't got the 2 trillion to pay for this nationalisation process. And even if we did, we don't want to spend that on gold mines, because we've got to build, you know, all sorts of infrastructure, service delivery, water, housing for our people. We can't go into an investment like that, which is cyclical and risky. We should take that money and put it into our people's lives, you know, with education and housing. So they did against it, and they're also saying, well, look, it can't happen because the Constitution says it can't happen. You can't seize assets. Julius Malema is saying, no, we want we don't want to pay compensation. We just want to seize these assets. I mean, this is the most irresponsible statement any South African could make, you know. And I think every corporate citizen should be speaking out firmly against Julius Malema's comments, because they're totally irresponsible. And I was glad that Nick Holland made the stand yesterday, giving another angle on this, saying our human resources would be ripped to shreds if we even did this further. We already got problems. And we know that Goldfields has been putting its money where its mouth is. It's been putting millions of rands into the universities to try and get more graduates. I think Nick Holland said last year we're down to a staggeringly low 500 practicing mining engineers. I mean, this is a low figure, plus all the other management problems we have. We know that Susan Shabanga, when she goes on these road shows to Toronto and to New York, the N-word comes up all the time, nationalisation. This is what's affecting our shares. We've got a gold suite at the moment here, a lot of companies that should have their shares rising astronomically. And what is happening? They also rands. We're not seeing the equities lift. The gold equities at a time of record gold price. The shares on the stock exchanges are not rising. Well, also outside of the country, but in South Africa particularly, because of this discount, this South African discount, because of the utterances around, nationalisation by a youth leader who's not even a youth, coming out with these ridiculous statements and actually affecting the lives of our people already, even before 2012 when they're supposed to take a stand on this. Hopefully in 2012 they will wipe the word nationalisation off the face of the earth, because it is doing us immense damage. And you can see the unions don't even want to work for the state. They want to continue to work for the private sector, because this has been an efficient sector, this mining, and it's been a transformed sector. If you look at the transformation that's going on in mining, the movement of blacks into positions of seniority is far greater than in any other sector. We also see, the Chamber of Mines working with the unions, working with the government in a tripartite alliance. No other sector's got that, so it's very advanced. And it's a pity that should be slammed on the jaw all the time by people who got no concept of what it's doing to the economy, and they are hurting their own people with these very statements that they are making that they think they're going to help them with. They're not.
Now finally, what do you think the future holds for Goldfields in South Africa?
Well, I think that one of the biggest issues of all the gold mining companies in South Africa is one of growth. They've also got to spread their geographical mining activities. So, they have been heavily involved in South Africa. A lot of the companies are, while they still invest in South Africa, and while South Africa is still the lion's share of the gold they produce, and they've got a good future here, Goldfields, particularly with South Deep. It's a brilliant gold mine that's going to be mechanized, and it's going to be long life, and it's a very big elephant that can produce a lot of gold over time. They're also looking outside the country and doing quite well in Peru. The expansions in Peru are good. There are new ones coming up in the medium term, and they will be producing gold at fairly low cost. They're also copper, of course. The copper comes into it when you go to South America. Copper also a flavour of the month at the moment, so no harm done there, but they work in gold equivalent. And then swinging around to West Africa, where at Jan Verliehle they've got tremendous outlook. It's still being firmed up, what the reserve position is, what the resource position is, but it's a thumbs-up situation there in West Africa, where we see a lot of companies going into. And then swing across to the Philippines. They seem to have a very good at the Far East project there that seems to have a lot of prospect. Okay, it's about 3 years away, but there seems to be some prospects of good activity. And again, around that ring of fire, we also see Harmony Gold in Papua New Guinea, and then now I think Harmony Gold have made no secret of the fact that they would also like to go into the Philippines, but we see that Goldfields is already in there and doing a lot of drilling, and also optimistic about what is upcoming there.
Well, we wish them all the best. Thank you for your time.
Thanks, Shannon.
That's the show for today. Join us again next time for more news and insights into what's happening in the mining world.